Ondas Holdings Inc. is a small but fast-moving company that's been catching the attention of investors looking for the next big opportunity in drone technology and industrial wireless networks. The story here is all about transformation, a company shifting from small, experimental beginnings to trying to become a serious player in autonomous systems and defense technology. Ondas operates through two main businesses. One is called Ondas Autonomous Systems, or OAS, which develops and deploys drone and robotic systems for defense, homeland security, and infrastructure clients. The other is Ondas Networks, which focuses on private industrial wireless networks used by railroads, utilities, and other critical infrastructure operators. The company's pitch is simple. It wants to capture the growth in both autonomous defense systems and industrial connectivity. Those are two multi-billion-dollar markets, but also very competitive ones. Now, here's where things get interesting. In the first quarter of 2025, Ondas reported about $4.2 million in revenue, up from just around $600,000 a year earlier. That's roughly a seven-fold increase in just 12 months. Gross profit came in at about $1.5 million, a major turnaround from prior quarters that were running at heavy losses. The company ended the quarter with roughly $25 million in cash. That's an important number because it shows they have liquidity to keep operating and investing in growth. Then came the second quarter and the numbers got even stronger. Revenue jumped to roughly $6.3 million, more than 6 times higher than the same period last year and up 50% from the first quarter. The company also reported a backlog of around $22 million, which means they already have orders in place waiting to be fulfilled. Cash and equivalents increased to around $68 million. That combination of growing revenue, healthy backlog, and improving margins is a strong sign that the business is starting to gain traction. For comparison, Ondas generated about $7.2 million in total revenue for the full year of 2024. The company's goal for 2025 is to reach at least $25 million in revenue. If they actually deliver that, it would represent roughly 250% growth year over year. That's a major step for a company of this size. So what's driving it? Most of the growth is coming from the Autonomous Systems division. Their drone platforms, known as Optimus and Iron Drone Raider, are being used in defense, security, and critical infrastructure missions. They've secured contracts in the United States, Europe, and the Middle East, which is helping fill their order book. The networks segment, while slower to scale, is working on long-term opportunities in rail and industrial communications. This kind of growth story sounds exciting, but it also comes with big challenges. Ondas is still operating at a net loss, around $14 million in the first quarter of 2025, and operating expenses are rising as they invest in development and production. The company will need to manage its cash carefully, and there's always the possibility of new capital raises that could dilute shareholders. Execution risk is very high. A few delayed contracts or missed deadlines could easily throw off growth targets. That said, there are some real reasons for optimism. The backlog provides visibility into future revenue, which many small companies in this space lack. The defense and public safety markets are expanding, and Ondas's focus on automation and data systems fits right into current trends in national security and infrastructure modernization. If they can continue to deliver on contracts, improve margins, and manage costs, they could start moving toward break-even within the next few years. For investors, the story here is all about balancing opportunity and risk. The opportunity is clear. This is a small company trying to ride massive waves in autonomous systems and industrial technology. The risk is equally clear. The business is still small, unprofitable, and highly dependent on executing a few key contracts correctly. The share price reflects that volatility, and it will likely continue to swing with every new quarter of result. When you evaluate a company like Ondas, a few key indicators tell the story. Watch for steady quarterly revenue growth, especially from the OAS segment. Keep an eye on the backlog and whether those orders are turning into actual revenue. Pay attention to cash burn. Are they maintaining enough liquidity to sustain operations without issuing new shares? And finally, listen for new contract announcements or partnerships that validate their technology in the real world. Those are the catalysts that can make or break an early-stage growth story like this. So, what does it all mean? Ondas is not a safe blue-chip stock. It's a speculative play that could reward investors who have patience and a strong stomach for volatility. If they execute and the markets for drones and industrial networks grow as expected, the upside could be significant. But if they stumble or fail to secure enough high-margin contracts, the downside could be equally large. The takeaway is simple. Ondas has momentum, a growing backlog, and a credible plan to scale. But it's still in the early innings. Investors who understand the risk and are willing to wait out the volatility may find it appealing as a small speculative addition to a broader portfolio. For everyone else, it's probably better to watch and see if they can sustain their growth trajectory before diving in. Because at the end of the day, Ondas is trying to prove that it can move from an exciting idea to a consistent business. If they succeed, the rewards could be impressive. If not, it will remain a story of unrealized potential.